Hi, it's Richard Bowser from Property Investor News here at the Property Investor Show at Excel, and I'm with David Sandeman from the Essential Information Group, EIG. Good afternoon, David.
Hello, Richard.
Hi. David, you've been, like us, exhibiting at this show for a good few years. How have you found today, the first day?
Today, actually, I was very encouraged that from my stand I could see the entrance. I saw people queuing way past the desk.
Yep.
They didn't all come to my stand, but I think they have found their way during the day. We've had a really good day today. Positive feelings about going forward, the market going forward with auctions, and we've had a lot of very good, meaningful conversations and transacted some business.
Good. So what you're seeing people who are, obviously in terms of the auctions market, they're serious about buying, or are you seeing people that are looking more towards selling, or a bit of both?
It was predominantly buying and looking to auctions as an not alternative, but additional source of finding properties.
Right.
They're going through the estate agents. Estate agents are getting depleted stock levels, and so they're seeing, is there going to be an opportunity in the auction room for them? And we're talking about how auctions can be, what the pitfalls might be, and how to maximise their opportunities.
Interesting. Yeah, I mean, one of the things I've picked up, obviously, is recently transaction levels now, and I was reading something the other day about the fact that in comparison, say, with 20 years ago, someone occupied a house and moved on after 7 years, and now it's in excess of 20. So if people are moving less and they're staying longer, obviously agents correspondingly have got less stock on their books.
Yes, I think that's absolutely true, and of course the rise in stamp duty puts a real dampener on just moving on a whim, certainly with the higher value properties. Auction's slightly different because the auction stock predominantly comes from non-owner occupiers. It comes from property companies who are trading their stock, and they want to have not a rapid sale, but a fairly sure sale on a set day and get market value for it. And that suits all parties in the transaction. Right.
And have you seen any trends this year in 2015, maybe in comparison, say, with 5 or 6 years ago? Things are obviously more positive at the moment.
Very much so, yes. We're seeing the internet's playing an ever-increasing role in property auctions. The dissemination of information is a lot easier. We're seeing increase in visitors to sites and also to the auction rooms. They're getting busier. Traffic's busier, following the auction online, looking at legal documents, and that's flowing through into transactions taking place, which is sort of slowly building, not ridiculously fast, but at a sensible, sustainable level. We're seeing the traffic go up. Odd blip every month, but yeah, the trend is sensibly upwards. Good.
I mean, you mentioned legal documents, and obviously, as you're probably aware, David, we attend a lot of auctions ourselves at Property Investor News, and one of the, should we say, alarming things that I find when attending auctions is the number of attendees that come up to us and say, where do I find the legal pack? And for me, that is, that's an interesting sort of flag up that these are people who are attending auction, they're intending to bid, and they've not actually read the legal pack in advance of potentially bidding.
Yes, I find that incredible as well. Certainly if somebody doesn't know where the legal pack is, we do see traders, some of our clients are traders, and they aim to buy 6 or 7 properties at auction.
Yep.
If one's a bit wrong, they'll take a bath on it, put it back in the next sale, let somebody else buy it, and they would have made a profit on the other 6 and not had the trouble of working. Yes. But for an individual coming for the first time or not buying a lot, you've got to read that legal pack. Absolutely. There may well be snakes in the grass, and you're buying them, and they can certainly bite.
David, you've obviously been in this industry a long time, and you're very, very well respected. And EIG is a fantastic service. As you may know, I recommend it to anyone. What are the typical? We've mentioned not reading the auction, the legal pack. What other sort of little tips could you give to someone looking at auctions for the first time?
Right. The biggest one, I think, is the guide price.
Right.
Too many people see the guide price and think that it's what the property's going to sell for. Because 2% of all properties go to auction, the other 98% go through an estate agent, and everybody's used to an asking price for the property. Indeed. And they might try and get it less. Auctions work the other way. The guide price is only a good indication as to where the reserve is going to be set. Now, 2 things. Firstly, the ASA has ruled that if it's a range, the guide price is a range, the reserve must be within that, and if it's a single figure, it can't be more than 10% over that.
Right.
However, the reserve is only the minimum price the vendor will take for the property. Yep. It may well be that people will think it's worth a lot more than the vendors, and it could rocket double that.
Yeah, seen this happen a lot.
So buyers, especially those inexperienced, get upset when they say, well, I was prepared to pay the guide price, and the bidding starts on the guide price and doubles, but it's ridiculous. You must not think that the guide price is what it's going to sell for. It is definitely not that. You have to look at past what's happened in auctions in the past to understand what it might sell for and work on that basis. And the other point to remember is that a guide price is only a snapshot in time as to what the reserve is.
Yes.
Vendors and auctioneers are quite at liberty to, depending on market interest, put the guide price up.
Sure.
So a property might be released to the market with a guide price of 200,000, but because of interest in the property, the auctioneer and the vendor will say, do you know, I think the reserve should go to 260, and the new guide price will reflect that. But you've already done your due diligence based on 200, and it may well then sell for 300. But as long as they follow those rules, that the guide price tracks the reserve as it changes, they've not broken any rules.
Right, that's really interesting.
My advice is, if you can't afford to pay the guide price for 10% more, you're never going to buy it. Remember, it may well go up, but critically, if you're interested in property, try and find out what that property is worth. And again, our site will tell you in a lot of cases, because we'll have similar properties which are sold in that area, which match it, and you'll see what auction buyers are paying for it. Don't rely on the guide price as the what it's going to sell for.
David, that's some great replies there, some really good hints and tips for readers of the magazine. It's Richard Bowser with David Sandeman of EIG at the Property Investor Show. David, thank you very much for your time.
Thank you, Richard, and thank you for writing such a good magazine. I enjoy reading it.